Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your daily mortgage rate update. We're sitting currently at 5/2/2022, and then by all means, let me go ahead and get this out of the way as well. To all my Muslim brothers and sisters, this concludes our month of Ramadan. Today is Eid, and I hope all your prayers and your fasts get accepted. But let's go ahead and go on with the mortgage rate update. It's not looking too pretty. I'm not going to tell you, like, it's frustrating. Frustrating is like putting it lightly, but we're going to be pricing out 5 different mortgage products. It's going to be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. If you don't know what a 5/1 adjustable rate mortgage is by now, it is fixed 5 years, interest only, and then adjust every single year according to the cap on your product and the market rate. So a 30-year fix will be sitting at 5.55%. That is 0.14% increase from yesterday, 0.23% increase from 1 week ago, 0.67% increase from 1 month ago, and 2.43 from 1 year ago. 15-year fix will be sitting at 4.89%. That is 0.05% increase from 1 day ago, 0.14% increase from 1 week ago, 0.67% increase from 1 month ago, and 2.34% increase from 1 year ago. 30-year FHA will be sitting at 5%. That is 0.12% increase from 1 day ago, 0.1% increase from 1 week ago, 0.56% increase from 1 month ago, and 2.38% increase from 1 year ago. 30-year jumbo will be sitting at 4.68%. That is 0.12% increase from 1 day ago, 0.16% increase from 1 week ago, 0.5% increase from 1 month ago, and 1.50% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.55%. That is 0.17% increase from 1 day ago, 0.36% increase from 1 week ago, 0.61% increase from 1 month ago, and 2.17% increase from 1 year ago. Now, as you saw, we did get another hit. The 10-year treasury yield on it, the T-note, is sitting at 3%, which, as you see, it's steadily just increased all the way up to the max of everything. New home sale purchases. So a lot of the news that you've been watching is saying that, oh, even though interest rates are actually increasing, home sales have still maintained. Well, it hasn't. We've actually dropped, as of today, by 19.78%. 19.78%. The reason why the numbers are looking completely on the opposite side is because most of the home purchases that we have are contingent based off of purchase contracts that were already in contract, whether it's a 30-day, 60-day, or 45-day, even some of them which are 90 days, which I don't know why anything would be in the 90 days. That's crazy why it would be 90 days. But as far as the conventional goes, or your FHA or your VA, and I hope to God nobody ever has to go through a 90-day closing, because that is you need to fire those people. That's what you need to do. You need to just fire them and get rid of them and just not even worry about any of it. But new home March sales have declined, matching expectations. Now, what does matching expectations mean? It just means that we expected it to go ahead and decline, which obviously everybody knows. As interest rates go ahead and increase, everything, the buying power that ultimately happens, will go ahead and decrease. New single-family home sales declined by 8.6% in March, according to the data released today from the Census Bureau. Now, the Census Bureau is a little bit off of it because their information is only based off of what they have off of the closed versus the new home. We're actually in teetering between shy of the 20% mark. That seems like a fairly substantial shift, but in this case, the total annual pace of 763,000 was right in line with the median forecast of 765,000. That is just, the difference between home purchases from one to another ones. Of course, the Census Bureau is not according to exactly how the market is doing and what we're actually in. We are actually much, much higher as far as a percentage rate, only because the Census Bureau takes into consideration existing purchase contracts. There are a few silver linings, though, to the 8.6% cloud. Sales continue to run and get above pre-COVID levels. No, they don't. Inventory improved to 406,000 homes, a 5.7 month supply from the 385,000 previously. So what does that say? That says that now the market is kind of shifting, right? The market is shifting because now we are having a much more higher inventory. This was a big problem before. A big problem is that we just didn't have enough inventory to go ahead and accommodate. Because what happened in the COVID, it's not that we lost inventory. That's not what happened. We didn't lose any inventory based off of that. We lost inventory because COVID restricted people. Now you're not selling, we weren't allowed to do anything. People were uncertain exactly where they were going, how they were going to go ahead and purchase a new house. They were like timid about people coming inside of their house because this COVID thing scared so many people. Now the biggest problem is that people are, and this is, I'm going to go ahead and just speak purely based off of myself, because between the 300 to 400 clients that we currently have right now in market to go ahead and purchase, when we shoot out a survey to say what's going on and what you're doing, and from the phone calls that we're making and touching base with each and every single one of them, as far as sellers go, buyers go, all the above, buyers are giving us the same answers that sellers are. The sellers are saying, yes, we are worried that we're going to lose value in our home, so let's go ahead and maybe even try to sell now. So we are getting new listings. Buyers, on the other hand, it's teetering on the other side. A lot of the buyers that we have, which is probably about 65% of the buyers, they're saying, you know what, the interest rates have increased so much, we're not sure exactly where the real estate market is. Let's go ahead and just wait another 6 months. Let's wait another year, because anticipating currently, as far as we're anticipating that it's going to be roughly about a 6 months to a year after the whole entire correction started. So what do I mean by that? I mean that from the moment that we started with the eviction moratorium being ended, and from forbearance and deferment and all of that, now we're catching up to concluding those forbearances, concluding with those deferments, making sure that we get all those dialed in. Now we're going to go ahead and see about 6 months to a year for it to stabilize, to see where we're at. Now we have a little wrench in the whole entire mix with these interest rates increasing so much. So as it gradually goes, now this is not something that's speculative. This is not something that's rocket science. This is not something that I know that everybody else and their mother doesn't know. This is just as 1 + 1 = 2 type of thing. Interest rates go up and we have more inventory. That's just what's going to happen. Interest rates go up, people's buying power decreases, then you weed out a lot of the people inside of the purchase market, and so we're going to have to adjust accordingly. Now, how much is real estate prices going to come down? I have no idea. That's going to be up in the air, because we are at, as I said many times before, we're at the mercy of exactly the feds and how much they're going to go ahead and increase interest rates, and how much we're going to go ahead and get screwed on all of this, which is not doing too good. So as far as the 406,000 inventory figure breakdown follows, 110, this is for new home sales, okay, for new homes. 110,000 of those 406,000 in the inventory, and this is only on new home sales, 110,000 homes have not been started yet. Well, new builders have been pulling back a little bit. They don't want to go ahead and make another huge mistake that we did back in 2008. 259,000 are still under construction, because it's been construction for the past 6-7 months. It takes roughly about 8 months to a year to go out and build out a home, and then 36,000 have been completed to date. While this is interesting, it is evidence of the conspiracy in the data. In fact, this report counts homes under contract, so completions aren't technically necessary in order for the count towards the total. So this is just basically off of the total new home sales. Doesn't exist on any of the other ones, since the Bureau doesn't really care too much about homes in contract right now, because they calculate it all within the same parameter. But yeah, that's going to be the world of real estate, what's happening. That's going to be your mortgage rate update. And for 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance, link in the description below. Until next video, guys, really appreciate you watching. And if you like the intro music, I'm going to go ahead and just chime it all in, and you could go ahead and enjoy that too. And once again, Eid Mubarak, and I hope you guys all had a great Ramadan. For those that are practicing, and for those who don't, I hope you have a great rest of your day. Peace.